So here's the thing, the environment that we're in, because of China COVID lockdowns, because of the war in Ukraine, because of incredibly easy monetary policy in the run-up, right? We're talking about the risk of recession or stagflation every day. We're talking about high inflation every day. Part of that is the way that property prices, including in Singapore, just continue to grind higher. I mean, obviously, this must be a good headwind or a good tailwind for your platform. But, you've been through business cycles before. Does this smell like a top to you? I have to ask.
So I think what's unique with this instance, Martin, is it's supply driven. So as with many other things that's happening in the world, when it comes to property pricing and rental pricing more recently here in Singapore, it's driven by a supply constraint. We've not had, the construction sector has largely been shut for 2 years. It started coming back online last year, but as you know, labor force in the construction space was down. Materials due to supply chain breakages are down. And as a result, construction is way off. And as a result, supply has been constrained. And so if you look at our property market reports, you can see a massive gap opening up between demand and supply. So demand has been on a tear and supply has been constrained. So that's what's driving some of this pricing. What is encouraging was earlier this week, already the Singapore government talking about another 4,500 build-to-order units coming up in the public housing space with the HDB. That's good early signs to see that supply correcting. I think we need to see more of that in the next 12 to 18 months for some of that price to moderate.
Harvey, when I take a look at the distribution of your business geographically here, obviously started and sort of based in Singapore, you're about 4 times, you get 4 times more engagement than your closest peer. That sounds pretty good. When I take a look at the similar numbers for Malaysia, 25 times more user engagement than your closest peer in that market. Why? I mean, explain what gives you such a huge advantage there?
So I think in Malaysia, it's more the result of, last year we did a pretty large acquisition. We did a roll-up play with our leading competitor in that market, iProperty. So we run 2 brands with 1 team in Malaysia. So we've got PropertyGuru Malaysia and iProperty Malaysia, and a single team that services both customer bases. There are slight differences in the user base, slight differences in the psychographics, so the kinds of users who use iProperty Malaysia versus PropertyGuru Malaysia. But obviously the benefit for us is that independent of what your needs are or how you think about buying property or selling property for that matter, we have a solution for you. So in that market, we got 2 brands, and that's the reason we have that kind of market share.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.